Hey everyone, welcome back to Corporate Decoder, where we peel back the layers of corporate filings to find the real story. And boy, do we have a spicy one today. Get ready because we're diving into an amendment filing that's all about adding the missing pieces after a big company merger. Alright folks, our company today is Quanterix Corporation, ticker symbol QTRX. You might know them for their advanced biological testing tech. Now, they recently announced a pretty significant acquisition, buying up Accession Biosciences Incorporated. This filing we're looking at is an amendment, meaning they originally told us about the deal, but now they're back with the important financial details they promised. Think of it as a Here's the rest of the story moment. So why are we getting this amendment? Well, when two companies join forces, especially through a merger like this one, which happened back in July of last year, regulators like the SEC want to see the combined financial picture. This amendment is specifically adding what they call pro forma financial information. Simply put, it's a fancy way of saying they're showing us what the combined company would have looked like financially if the merger had happened before these financial statements were created. It's all about giving investors a clearer view of the financial health of the newly formed entity. The real meat here is in the pro forma financials. We're looking at what the combined company would have earned and spent around the end of last year, December of 2024, and also for the first half of 2025, right up until the 30th of June. This helps us see the immediate impact of bringing Accession into the Quanterix family on their revenue, costs, and profitability. It's like getting a sneak peek at the combined company's financial scorecard. Now, the actual numbers are presented in Exhibit 99.1, which is their unaudited pro forma condensed combined financial statements. This is where the magic really happens, or where we can spot potential issues. We get to see how Quanterix and Accession's finances blend together. Are they stronger together? Is there overlap that can be cut? Or are there hidden costs we need to watch out for? This is the core of our analysis today because, let's be honest, that's what most of you are here for. Let's pull out a couple of key figures from these unaudited combined statements. Looking at the combined company, S performance for the fiscal year that ended the 31st of December 2024. We see their total revenue. Now, while the exact number is subject to presentation in that exhibit, the general trend from these types of filings after a merger is to show a significant top-line boost. For example, if we saw a jump of, say, 30% in revenue compared to Quanterix S standalone revenue from the previous year, that would signal a considerable expansion of their market reach and product offerings. This is the upside of mergers, a bigger footprint. Now, we also need to look at what it costs them to do business. When companies merge, there is often an increase in operating expenses too. Let's say the combined operating expenses saw an increase of 25% year over year. While that sounds like a lot, we need to compare it to that revenue growth. If revenue grew faster than expenses, that is a good sign that the merger is creating efficiencies and synergies. But if expenses grew faster, it might indicate that integrating Accession is proving more costly than expected, perhaps due to duplicated roles or expensive integration processes. The devil, as always, is in the details of those expense lines like research and development or selling, general and administrative costs. Then there is the bottom line, the net income or loss. If this pro forma statement shows a net loss for the combined period, it might be due to one-time merger-related costs, which is pretty standard. However, if that loss is substantial or widening compared to expected standalone performance, it's a red flag. Investors always want to see a clear path to profitability for the new combined entity, a healthy pro forma net income. Even a modest one would suggest that the strategic rationale behind the merger is likely to bear fruit financially. And who is overseeing these critical financial aspects? That would be the Chief Financial Officer, Vandana Sriram. Her signature here confirms the accuracy of the information presented in this amendment. It is a formal confirmation that the company stands behind these numbers, even the pro forma ones that represent an as-if scenario. Her role is crucial in ensuring that the financial reporting is transparent and accurate, especially during significant corporate events like acquisitions. Now, looking at this filing in the broader context, Quanterix is making a big bet on consolidation in the life sciences tools and diagnostics market. The acquisition of Accession Biosciences Incorporated suggests a strategy to become a more dominant player, offering a more comprehensive suite of products and services to its customers. This is a common move in maturing industries where companies seek scale and efficiency through mergers. The success of this strategy hinges on effective integration and realizing the projected synergies. If Quanterix can successfully merge Accession's operations and technologies without significant disruption and cost overruns, they could emerge as a much stronger competitor. However, the risks are significant. Mergers are notoriously difficult to execute, and Therese always the possibility of culture clashes, underestimating integration costs, or losing key talent from either company. My take on this is that Quanterix is playing a long game. They are clearly aiming for a larger market share and increased competitive advantage. The inclusion of this pro forma data is a necessary step to rebuild investor confidence and provide transparency about the financial implications of the merger. The key indicators to watch will be how quickly the combined entity achieves profitability and how effectively they can leverage the combined technologies to drive innovation and sales. It's a high-stakes move, and the next few reports will be critical to understanding if this merger truly leads to greater financial health and market strength for Quanterix. Alright, that's our deep dive into Quanterix amended filing. What are your thoughts on this merger and what it means for the company's future? Let us know in the comments below. If you found this breakdown helpful, smash that like button and subscribe for more corporate insights. And don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and we'll see you in the next video.